Hey, hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for January 30th. That's a Thursday. And yeah, if you can't tell, I'm a little bit under the weather. So this might be maybe a half an hour stream. But yeah, I did just want to, continue to do this as a routine. So I didn't want to let you guys down. But yeah, so here what we can see with the S&P 500 index, or the SPX, closed yesterday above 6,000 at $6,039.31, but being down about 0.5% on the day. And yeah, it does look like it is getting rejected from this light blue parallel channel that I have drawn there. If we can see where those pivot points are. So it might be a little bit tough for it to get up to there, but depending on what's going on with the markets, this could be coming up to fill the gap here at $6,101.24, which was the closing price from January 24th, which was last Friday. So, I think that is a possibility, but I also think it's a possibility that it does retrace perhaps down to the 618 here below $6,000 at $5,908.87, or really just around $5,909. So I mean, that's pretty much all I have to say about the SPX, but let's look over at the SPY, basically showing the exact same stuff, but we do have some pre-market trading over here. So I wanted to look at that on the 10-minute time frame. And yeah, I mean, it does look like in the after hours yesterday, we were getting held down below this blue line here at 603.05, which was, let's see, a gap that had previously been filled, since it is a blue solid line there. But then in the pre-market, gapped up and then kind of pulled back, and now hanging out right above 603, currently trading at around 603.21. And so, yeah, I mean, this one, might be getting rejected right around where it's at, but could be going up to fill the gap here at 607.97, which of course was the closing price on the 24th. And, if it does come down to the 618 here, that's around $589 or so. So those are two levels. And I personally was expecting a little bit more volatility around the FOMC meeting and Jerome Powell speaking yesterday, but we didn't really see it. No rate cuts, no rate increases. And, it just seemed it was just kind of a boring meeting. I don't know if you guys listened to it, but nothing too exciting going on there. And so, we didn't see spikes to the upside or the downside. But if I do look over at the volatility index, or the VIX, we can see that it has been cooling off a little bit from the breakout above this light blue downtrend. And now it looks like it's trading below this light blue uptrend. Maybe we get a gap fill coming down to around 1485 with this one. It does look like I have an alert set there, just in case that does get hit. I will be aware of it. But for me personally, I don't trade the VIX because it is options or expiration dates, and I never know exactly when we might see some spikes in volatility. And so I like to trade the UVIX. This is the 2x long VIX futures ETF. Closed yesterday at a price of $28.48, being down a little over 1% on the day, and it is continuing a little bit lower, about 0.5% in the pre-market. And so we do have this uptrend that I had drawn here. Hopefully, yesterday's close, open and close below that uptrend, hopefully that's a fake out. We do start to see the price action go higher. But I would not be terribly surprised if we did come down to fill this gap here at 27.42, which I believe was the closing price on, the 24th, being very similar to the S&P 500, just kind of be inverted relative to it. And so, that was the gap going to the upside. We need to fill that to the downside, but we may not fill it. And I do also have this alert here set at $27. That, for me, is the level that I would like to be adding to my position. And I have to say, I don't necessarily regret it. I think regret is a bad word. But when price was up here around 37 in the pre-market on Monday, I maybe regret a little bit, at least not trimming my position. And if in case this were to have come back, it did. So that sucks a little bit, but we are still in this green box. And just like this green box over here, we did see some little pumps before the pump over here. And, these tend to be about 2-week periods in my view. From what I've seen, sometimes they're not always. This was a pretty quick decline here. But we've also had some holidays, some 4-day weeks. So it has made these levels or these ranges a little bit shorter. But yeah, I mean, I basically view the UVIX as potentially getting up to around 40, just like it got up to, let's see, what was the high on the 13th of January. The high was 42.30. Maybe we get close to that, but not quite. I've got this level here at $40.70, and that was, I believe, a gap from over here, closed at that price on August 30th, before gapping up a little bit and then really taken off. And so that blue line would also have to correspond with, actually, no, I was thinking about the S&P 500. But yeah, so this is a little bit below my average, but I don't have a very large position. So yeah, I'm just kind of keeping an eye on 27 for this, but also, we'll be prepared if it does go down to around 25 or so, marked by this purple line here, corresponding with the base of that downtrending parallel channel. So yeah, I mean, that's what I would look for with that. I'm just going to look over at the VIX, again, just to see if there, I thought there was, I was thinking about the SPY. Yeah, right here. So there's this gap. That is, what we are trading above currently, above at 603, right around 603.35 in the pre-market trading, above that blue line. But anyways, I also, wanted to actually go over Bitcoin. I was going to go over uranium, but I need to do Bitcoin first. This one, I just definitely feel like Bitcoin will be heading at least towards 200,000 later this year. And I do think that this downtrending consolidation is a bull flag. We are holding above this yellow downtrend that was resistance on multiple occasions before we, tested it, got rejected, and then broke through it, and then effectively retested it twice over here, being just a little bit above it. And so it looks like I do have an alert here at 100,000. I think I had a level there, but just have that marked if in case it does go below 100,000. But with it now above 105,000, I think that we could potentially be seeing a very nice breakout. And where could that be going? I think 1010, that would be higher than the high over here, but could be getting, let's see, actually, I could do a Fibonacci extension, assuming that this is the low here, and that would kind of give us a rough idea of where this could be going. Oh, and this is the 4-hour chart, so I kind of want to look at this on the daily. And yeah, so, and with that being said, I also do have this purple line here at right around 92 or 93,000. That was the wick bottoms for this consolidation over here, so it's possible that we do retest that as we are continuing to consolidate over here. But, like I said, I think it's a bull flag. And so anyways, I'm just going to draw a Fibonacci extension going from the low here up to the all-time high and then down to the low that was hit on January 27th. I'm just going to make sure that we got the right proportions on here. Yeah, just the 100%. That is where I could see price going. So if I drag that down, that would be bringing price to around 100. Wait a second, I'm reading this wrong. Wish there was a comma there. Around 118,000. So let's say, above 110, right around here where the cursor is, potentially up to, maybe a little bit higher than that, around 120. But yeah, this is marked here right around 118. So, I think it's a bad time to be short or be getting bored with crypto, whether it's Bitcoin, also with Ethereum. I've been seeing a lot of people talking trash about Ethereum, talking about it being boring. And there's actually a meme that was posted on X that I might pull up. I retweeted it. And let's see. Yeah, I remember this being posted 4 years ago, I guess, where it's just like, the crypto market is really taken off, but then ETH holders are just being left behind. But the reality is, that's a good time to be accumulating. I remember I used to hold a lot of ETH before. It gets really boring. That's a great time to be adding. And then, when it does take off, I think it could easily be getting above $4,000. Maybe I want to pull up the ETH chart here since I am talking about it. And yeah, Ethereum right here. Let's see, where is that? Yeah, so I don't have any drawings on this. But yeah, this has just been super boring, fading, getting these big wicks to the downside. Looks like the wick low on the 13th was around $2,920, currently trading above $3,000. And perhaps a few days ago, no, the low was $3,020, $20.56. And yeah, so I think that, you can just see this downtrend here. Maybe I just want to draw that in. Yeah, so I think that's a level that we could be breaking out, and the highs over here, kind of the double top, was around $4,110 or $11. And yeah, I guess what I can do is similar to what I had just done with Bitcoin, do a Fibonacci extension, see where that 100% move would be, and that would put it around $4,900 or close to $5,000. But, if Bitcoin's heading to 200,000, I think Ethereum could potentially, I have heard 10,000, but maybe it's a little bit shy. Maybe it just gets to 8,000. So people are waiting for 10,000 and then they get left holding the bag because they were greedy. So maybe 8,000 is a reasonable price target for Ethereum. And that is more than a 2x, nearly a 3x if it's going to 9,000. But yeah, and then, yeah, so, okay, I've done Bitcoin and Ethereum. Let's look at uranium. This does look like it is bouncing pretty nicely, but just like I had talked about yesterday with the rising 3 methods, I think it will be very interesting to see where URA, this is the Global X Uranium ETF, URA closed yesterday at 28.36, being up a little less than 3% on the day, and it looks like it's trading up about 1% in the pre-market around 28.62. But, I do view this high from, I believe, Monday was 28.76. Let's see. Yep, that was the high. And I think that's going to be a pretty important level. Ideally, we close above that level today, Thursday, and continue with the strength on Friday. But if this were to play out as a rising 3 methods, I would not be surprised to see this going above 28.76 today, maybe closing above that level, but then maybe we get a pretty big sell-off on Friday. So I'd be cautious of that, as this gap down with the big red candle on that day doesn't suggest a lot of strength. Did bounce from this, let's see, where's this parallel channel drawn from? Maybe it's a little bit hand wavy because we did get some trading below it over here. But it does look like there's a nice intersection with the high on February 1st of 2024, wicking up to that level here. You can see it there. Also, really, getting some near tests of it over here before consolidating around it, breaking above and then breaking below. And yeah, we did pull back to that level, got a nice little bounce. Do have this gap up here to around 30.53. Which was the closing price on the 24th, Friday of last week. And yeah, so I would just keep an eye on this. I think 28.76, very important for us to close above today, as well as to hold above that level tomorrow, just because, I'm mapping out the possibility of this being a falling 3 methods, and that I do think that this will continue to the downside. It's good to set any biases aside. And so my bias looking at this is that, I think it's going to the downside, but I could definitely be proven wrong if we close above 28.76 today and tomorrow. So that is what I would be looking for. But if we do see a very big red candle on Friday, that would be a completion of the rising 3 methods if it does pull back down to around $27 or so, 27 and some change. Then I would think that this could be coming down to around $25, where I have that marked here. And let's see, do I have some Fibonacci levels, yeah, so there is this one, I think I went over it yesterday or the day before, the 786 here is at 24.51, and getting down into that level around 25. We do have some consolidation over here, so that could definitely be acting as some support. And so I do have a lot of tickers up here that I went over yesterday. I am pretty much just going to go over three, I think, that stand out to me based on options data. One is BlackBerry, another is Celsius, and the other is Intel, I believe. And actually, maybe I want to follow up on Wolfspeed because that wasn't too exciting following earnings yesterday. But yeah, with BlackBerry, this closed yesterday on the 29th at $4.34, being up around a quarter of a percent on the day, continuing up about 1% in the pre-market. And yeah, I mean, this is one that I did swing recently for a 20% profit, just a call contract. And, I like BlackBerry a lot just because I think it's funny. I think people associate it with like the 90s and those keypad phones. But people don't realize that they do have, cybersecurity and a software aspect to their company. Which I think does relate to AI. So I do think that there is a lot of potential for this to go higher. But since it has been consolidating here, it has been putting in higher highs. And with those higher highs, the RSI has been putting in lower highs that you could see down there. So that is unfortunately bearish divergence. And so I actually did have a buy order placed to replace my contract at the price I'd initially bought it at. So if it were to dip down to I think 48 cents. But then I kind of realized, this is one I don't have any shares of, I don't have any contracts of, and I just am spreading myself too thin. So I'm just going to sit on the sidelines for it. But I did want to go over the data that stood out to me for BlackBerry. And that is probably just going to come from, let's see, looking at not the contract data, but just the, so this is not the contract, this is just the options data for all of the contracts, so options volume here. And so BlackBerry, we did see positive volume yesterday. It does look like it closed the day with the volume of 2.8 thousand, and the net put premium came down by about a little less than 7,000, whereas the net call premium went up by around 60,000. So that's not a huge amount of money, but this is a pretty cheap stock. So I would not be expecting, the price or the premiums to be super high. And we can see that the net call premium here in green was positive throughout the day, whereas net put premium was negative. And let's see, I think I want to pull this up over here just so we can see the bear bull slider. And it looks like it was about 50% on the bullish side. So it does look good. But, with this neutral being here, maybe that neutral is more on the bearish side. It's kind of 50-50. And with, looking at the chart and seeing that bearish divergence here with higher highs and lower highs, I think it's good to be cautious with this one. Maybe the options data is suggesting that it's bullish, but the chart data is not. So that makes me think, this is one to be good to sit on the sidelines for it. If it breaks higher, I'll be cheering for people. If it doesn't, that's fine too. And I did also want to just look at the contract. This is the one that I was holding. If I do scroll down here, we can see that this was the $7 call that expires in January of next year, 2026. Did get an increase of an open interest over, really like the past few weeks. So it's gone from, around 7,000, less than 6,000, really, going back to the 15th. And now it's almost, tripled, right around 15,000 contracts that are held open. But this is, a year from now, I could definitely see it pulling back to, like I said, my average was 48 cents. I exited my position on the 28th, was considering buying back yesterday. I think I actually did have a limit buy at 48 cents, but the low yesterday was 52. And again, I think I need to just be a little bit more disciplined, sit on the sidelines for this one. And so I also wanted to go over Celsius. This is one that I do feel a lot better about. Also saw Gareth Soloway posting about this, and maybe I do want to pull that up. I believe it was on, let's see, on, I think I want to go to notifications. And so I think Gareth Soloway posted some stuff about it. So Meta Celsius, yep, so this is one that I liked. Celsius showing signs of accumulation, sitting on major support, needs a catalyst, but has serious upside potential. And so I'm just going to say covering CH in today's pre-market prep. And then I might just go over here to get a link to this. And I can post there so it serves to my benefit a little bit. There we go. And I can delete this stuff. It's not necessary. All right. Okay, yeah, so feel good about that. And this, let's see, $25. What is that based on? So that is based on, you know, the levels over here. This is going back to where it was resistance, the end of 2021. So this is the last couple days and first couple days of 2022, 21 to 22. And kind of came back right around to that level. And if we do look at where it's currently trading, it right around there, it did break below this uptrend that I had drawn there. We do have this level up here. Maybe I want to switch over to the weekly to get a better view of that. And yeah, I mean, I could actually, you know, I could adjust this a little bit, you know. Why do I have it drawn like this? Maybe I want to switch over to the daily, see where those levels are. And yeah, let's see. I mean, we would have close below it. 2 closes below it, so it doesn't look so great. But maybe I want to do it to right there. Let's see, the close on that day was 1396. Just going to check what the level is there. 1396 looks good. And this over here, 1315 was the low, so going to lock that into place. Might make that a little bit thicker. Maybe I'll make it light blue. So yeah, that's a level that, you know, it's still below us. You know, and I could, you know, just twist it a little bit, you know, adjust it a little bit to be from, really, let's see, the close over here. And so let's see, that closing price was 1413. Got that there. And yeah, I mean, we did get, you know, a fake out break here. But we did bounce from it here, tested it here, you know. So this is from the low, this is from the close. So maybe this is valid, maybe it's not. Maybe this is above, you know, where we're currently trading. Yeah, so maybe that's not such a good level, or maybe I just need to adjust it more. Yeah, so whatever it is, I'm not going to lock it in place because I just wonkified it. But right around 25 could be support. And then let's look. I am looking at this on the daily time frame. We do have lower highs here in the stock price. And that does look like potentially, let's just get a trend line going up there. Maybe from over here. Maybe this is a falling wedge, downtrending consolidation. And with that, we do see lower lows in the stock price where we see higher lows in the RSI. And so that is actually bullish divergence. So this does suggest that it could be putting in a bottom. Very important to see how it holds around 25. But then if we do look over at the options data, I think that's going to be pretty important to consider. Celsius. And also with this one, I did do a video on it. Maybe I do want to pull that up. Let's see, I'm just going to pull up the channel here, scroll to some videos that I put out. This is a little while ago. Let's see. Yeah, massive Celsius call position opened for Celsius. I put that out a month ago. It's only had 100 views, but that is really just based on, let's see, this call contract, which if I do scroll down here, this is the $40 call that expires in July of this year on July 18th. And so we can see that the open interest is nearly 39,000. Hasn't really changed too much the past few weeks. But if we do scroll down to about a month ago, we see that on December 12th, we saw a volume of over 38,000. And then the following day, we saw an increase in open interest of over 38,000. And so that's actually, no, that's right here. So that would be the open interest. This is the volume, open interest, increase in open interest of nearly 38,000. And so all of those calls, when it was valued at around $4.40, those have still been held because we see here over 38,000, almost 39,000, with the premium down, 3/4 of that value, only about $1.16, the low from yesterday. So, I think that's looking really good. And then if we do look at the general data for all of the Celsius contracts, we can see that volume did increase yesterday, which corresponded with the net put premium being slightly positive, being around $50,000. So that's a little bit bearish. But if we look at the net call premium, that's up an increase by over $700,000, not quite a million, but notably higher than the net put premium. As we can see, the net call premium did start negative at the beginning of the day, selling of some calls, but over the course of the day, that net call premium did increase. And then, of course, you can see the net call premium in red here being slightly above zero. Sorry, that was blocking the volume just behind my head. But that's looking pretty good. And so I will just pop over to here to type in, let's see, I was just looking at Celsius to see the bear bull slider. This looks a little bit not as confident in the bullish favor as BlackBerry, but it is 47%, so less than half. But with that neutral being around $1.2 million, we do see that the bearish side over 4 million, or bearish and bullish over 4 million, but bullish looks like it's around for almost $5 million. So that does look pretty good. Lots of money on that. But as far as the call premium increase, the net call premium increase, it's effectively like you cancel out the bearish from the bullish, and then you get about 4 million or 5 million for those. But they net to call premium of increase of over 700,000, whereas net put premium increased by over 50, but being a lot less than the other one. And so looking at these contracts, the ones that I hold, these I actually placed buy orders for them because I do think it could be flipping. And so this one, I think I placed a buy order for this being the $50 call that expires in June. I think I got one contract. I think my average is around 127. So, while I could have gotten my average down more notably had I bought when it was 40 cents, I do think it could be turning around. So I think I have a buy placed for one more contract at 59 cents. And, maybe I'll be getting ripped off. Maybe it will be pulling back to around 50 cents. That was the average from yesterday, but maybe not. And I just wanted to take the opportunity to get my average down since I only do have one contract. And, if this is starting to turn around, show some bullish signs, now is the time to get the average down. And then looking at this other contract, the $100 call that expires in January of 2026. Not so much going on here, but this one, I think I placed a buy order, maybe around 30 cents. I'm not exactly sure though. But I just looking to get my average down with those. And then the other ones that I wanted to look at, Intel, I don't think I have too much to say on this, although, maybe I want to look up earnings whisperers and see what they've got going on. And I think that Intel does report earnings today after close, along with Apple, Visa. So it's going to be a pretty big day as far as earnings go. And I think that just looking at the chart, Intel, kind of excluding this green candle day, since it did effectively, just continue on this downtrend, it has more or less been down for consecutive 1, 2, 3, 4, 5, 6, 7 days. And and it also, let's see, did fill the gap here. What was the low yesterday? 1967. We do have this gap here where I have an alert at the low was 1966. We do have this gap here at 1967 where you can see that alert there. And that was the closing price on January 16th at 1967. So we did fill that gap. So I am going to adjust that to be a solid line to note that that level is and has been filled. Maybe today we come down to around 1950, 1952. Looks like it's the 786 from this Fibonacci retracement. So yeah, I mean, I just think that with earnings being after the close today, I think that this is looking pretty good. We are putting in, let's see, higher lows here in the stock price, also higher lows in the RSI, so no bearish divergence there. Volume is a little bit higher as this has been going lower. So I'd kind of like to see volume just cool off a little bit today, and then maybe we do start to see a bottom move to the upside. That would just be great. But let's see, I don't think there's too much standing out in the options data with this, but let's see, I'll just flip over to look at the general information over here. Yeah, okay, so this one actually does look pretty good. So we can see this is, for all contracts for Intel, and we can see that the net volume, the volume over the course of the day did increase, went up by over 22,000 contracts. And we can see that with that, there was a net sell-off of puts in red there coming down over the course of the day. And the net put premium was down by nearly $500,000. So that's looking pretty good. And the net call premium did increase by over $1 million. As you can see, was a little bit negative at the start of the day, but did close the day above 1 million. If we do scroll lower, this is 47% on the bullish side. But with that portion being on the neutral side, it is kind of 50-50. But generally, looking at this data, puts being sold, that's good, that's bullish. Calls being bought, that's good, that's bullish. And there being an increase in volume, suggesting that those the buying of calls definitely outweighs the buying of puts. So I think that this looks really good. It's just risky with earnings being after the close today, so along with Apple, along with Visa. And so it's going to be a pretty potentially volatile day with this. So for me, I'm not adding to my Intel positions, or at least not any that are dated soon. Perhaps maybe to the one that's expiring in January. I actually forget. And actually, maybe I can pull it up. This is what I go over. Yeah, so it does look like for the $30 call for Intel, I'm not buying, but I would be interested if it came down to around 45 cents. But, if it does come down to that today, I just don't have that much on the side, so I'd probably be chilling. It did come below 20, as you can see over here. So I'm a little bit just on the fence because I do have at least one contract. I think I have multiple contracts, and I do have a limit sell placed to exit all of them for 20% gain. Because that's just going to be my strategy moving forward. I've been holding these contracts a little too long. And then the $50 call that expires in January does look like I have a buy order at 25 cents if it does dip below the low that we hit on Tuesday the 28th, which was 28 cents. If it dips to 25, I'll pick up another contract. But yeah, just have a limit sell. I guess I only have 3 of these contracts because I bought 2 over here on the 17th, just above Ed's head. You can see that over here. But then over here, I did get another contract at 29. Might get another at 25. But only because this is dated so far into the future, because trading options, especially around earnings, is very risky. And let's see. I'm not going to go over NEO or Plug. This one's still, I think it could potentially be forming a bottom there. But I don't think I'm being aggressive with it. Don't have a buy placed on it or anything. But I did add to my position yesterday. And then, let's see. Did want to go over Wolf. Yesterday it closed flat on the day because on, Tuesday closed at $6 yesterday. On Wednesday closed at $6. In the pre-market, it's up about 15 cents or about 2.5%. If we do look at the 10-minute time frame, we can see how it responded around earnings. Was pretty volatile, going up to around 649 during the after hours trading, and then dipped down to a low of 564, which kind of miraculously was that level that I've drawn up there. So if we do look at the daily chart, we don't have any wicks coming down to 564 on the daily, but looking at that pre-market trading, we do have, I might just switch over to the 4-hour, we do have a wick down to 564. So pretty cool that that 618 acted as support, getting a wick down to that level. And with that being said, yeah, I mean, I just kind of view this as having been consolidating below this downtrend. Eventually, it's going to break out. I could see this potentially over the course of the year, so longer term, potentially getting up to 30. I believe I have a call contract with the $20 strike. That's the 1618 Fibonacci extension here. Now that's at $21.11. I do have one call with a strike of $20. That expires in January. If I do pull over to the information here, you guys can see that. I did pick up one contract on the 28th, so you can see that just above Ed's head there. I did get one contract at 90 cents, which was pretty close to the low on that day. And yesterday on Wednesday, the only two contracts were traded, and yeah, right around 95 cents. So not too exciting. I am in the green a little bit. I do have a limit sell placed at $1.08 just because, you know, maybe this goes up to hundreds or dollars, so I could be making hundreds of dollars on this. But I just don't want to be holding these contracts long term, so I'll just be planning to trim at 20%. And if I do look at the data for Wolf, let's look at this. And I am going to be ending the stream here after this just because I'm feeling a little bit lightheaded. You can probably hear it in my voice. I got a cold that's been beating me down. Yeah, and so Wolf, it actually doesn't look so good. We do see that the volume in the contracts was negative, net selling. We see that net put premium over here, increased over the course of the day. So puts increasing, that's bearish. And then net call premium increasing, that's bullish, but it did not increase as much as the net put premium. So overall, I'd say that's net bearish. We can see that net put premium increased by over 500,000, whereas net call premium increased by over 300,000. So definitely more in the favor of the bears. And if we do look at the bear bull slider, it does look like it's 41% on the bearish side, with the difference of that being either neutral or bullish. So yeah, I mean, I wouldn't be surprised if looking at the chart, we do get a little bit of a retest, maybe in the in market hours do retest 564. And actually, since we have come down to that, I might adjust this Fibonacci levels to exclude the 50%, and I might add the 786. So if indeed this does end up being bearish, like what we have seen in the options data, that does suggest this might be selling off some more. Maybe this comes down to around 520. We do have the 786 here around 521, which does look like it corresponds with the high from the 14th of January at 520. But we do have a gap based on the close of that day at 482. So I would definitely look for some more downside. And so that is why, for me with my one contract, I am looking to exit at 20%, because if it does dip lower, which does seem likely, I would like to be adding to that position. And so, yeah, I want to feel a little bit comfortable doing that. Yeah, Wolf, I'm going over it. So you read my mind, my agenda for the day. So yeah, Wolf, I just yesterday with the FOMC, with Jerome Powell speaking, I was expecting more volatility. We didn't get it. And with that being said, I think this could continue to just kind of consolidate, maybe fade a little bit more, but maybe, put in a higher low. So, this is just nothing to do with what's actually going to happen, but maybe we test this uptrend that I just drew here, very wonky. I'm going to make that purple so it stands out as being fun. And, that would be putting in a higher low. I think that'd be good. That would be testing effectively the 786 here. I think that would be good, pulling back to that level. Also, we do have some consolidation below that. So while not filling the gap here, we are coming back to some support. This was resistance right around that level. We could not get above it on these 2 days and actually closed below it on this day. That was the 10th, 13th, and 14th of January. So some resistance there, consolidation below that level, that could be acting as support. So I think those waiting for this gap to be filled, I think they might get left behind, just kind of a psychological example of people seeing that gap there, expecting it to get filled, but then they get left behind and then they don't realize it until they see like a breakout, above $6-7, or really, I guess I should say 681 there, which was this horizontal line that I have there. I'm not sure what it's based on. But yeah, I think that we might get some dip buying opportunities over the next week with Wolf. I still think that overall, this is going to be going higher over the course of the year. So I think it's good to be trading it with that kind of mindset that this is in discount zone. It might be in a further discount zone next week or two, but I think that may not be long-lived. And actually, maybe since I didn't do this with other ones, I might just pull up the Wolf Max Pain for this week. I suspect it's going to be $6. Yeah, $6. So hopefully it starts to move and maybe we get a close this week, tomorrow, above 650. That's putting it above the next strike. And then that would be suggesting that maybe there'd be some gamma squeeze potential for this if we're starting to close above those max pains. And with it being above $6 in the pre-market at 627, just going to switch over to the 10-minute time frame, did get an excellent bounce off of this 618 here at 564. So I suspect this is going higher. But yeah, anyways, I'm going to give my voice a break, and I'm probably just going to relax the rest of the day. I might stream again tomorrow because I might be calling in sick for tomorrow. I didn't go over PLTR. I guess I can do it real quick. I haven't really been paying attention to it because for me, I bought one share at because I had sold the share at 40, got left behind, and then just because I'm an idiot. I bought another, just one share. I bought back a share at $69, thinking that because that is, a fun price, I would not want to average it down. Maybe I'd buy the dip here when the low on the 13th was 63.40, but then my average wouldn't be 69. It would not be as fun. And so, yeah, I just have one share at 69, plan on holding it, not going to sell it. The level that I would consider selling, not selling, buying another contract would be around $45. Marked here, it does look like there's kind of this, there's a gap down here to 41.41, but we did have this consolidation here around 45. And so that is where I would potentially look to be adding to my position. But yeah, I just plan on holding the one share at $69 for funsies. And if we do look at the chart, we are putting in lower highs here. Also putting in lower highs with the RSI. So it's not bearish. It's not bearish divergence because we're lower highs here, lower highs here. There's no divergence. Let's see. And this is going up, consolidating. So yeah, this looks good. But we do have this kind of wick to the upside. 124, January 24th. That high was at 82.24. So I think that's an important level for us to be closing on. Do have earnings on Monday, I believe, on the 3rd. Not sure if it's before or after close. So yeah, around earnings, I think it's going to be risky. But I think that this does look like it's bullish consolidation. So I think it's likely to continue higher. And I think it's I had accumulated shares down here, and I was trimming them on the way up. I sold my last share at 40. I regret that. It was dumb. Good to at least have, one share. If you're going to be a small fish, be a small fish. Be proud of that one share. And so, yeah, I got that at 69, and I don't plan on adding until, 45. But, yeah, I think that Palantir is one to... and also, I think that the example from DeepSeek that we saw with everything pulling back, that suggests that, the software, the how we utilize the AI infrastructure that we're building, that is going to be very important. And Palantir specializes in that. So I think it's a pretty good. Yeah, so Monday after the close is their earnings. So yeah, for me with this, I'm not trading options with it. I'm not trading calls with it, shares, just holding on to my one share. If it does dip to 45 at some point over the next 6 months, let's say, then I would want to get my average down. If it doesn't, if it dips down to 60 or lower, 50, that's fine. I'm just going to be chilling, not getting emotions involved in it. If I end up having a lot of cash on the side, then maybe. But so far now, no, I'm just chilling. Maybe if it comes down to 50, I'd start looking into options to trade some of those. But not looking for it around. Yeah, hey, JG, thanks for joining. Thanks for the subscription. And yeah, today I'm toned down a little bit just because I got a cold. You can probably hear it. If I'm calling into work tomorrow, I'll do another live stream. But I'm just trying to do pre-market preps, either a recorded video before I go to work or a live stream like this. So I can take some requests, but really just kind of wanted to go over options data as well as S&P 500, the VIX, Bitcoin, maybe some other cryptos, and your uranium looks pretty interesting just because, AI infrastructure is going to need energy. And I think that the U.S. has been lagging in the nuclear forefront, and we need to step up our game. So I think that'd just be great for the country. And so that's why I've been tracking uranium, but I do think that we could be seeing some dip buying opportunities, as you can see with that arrow there. But maybe I'm proved wrong. We'll see how this week plays out. But anyways, I'm going to get signing off because my voice is dying. But yeah, anyways, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps like this. Thanks a lot.